Hi everybody, this is Gary Dean with Sentiment Timing, and this is our technical video report for Tuesday, July 31st, 2018. So we had a little bit of a crazy day today where the futures were kind of pointing to a flat open, and then we got some news about the trade war that's been going on with China and how we are looking to get into some talks, and that spiked the futures up, and it ran into the resistance zone that I mentioned in the morning notes. And right now, really the best free advice we can give you that we've been saying to our members is you really want to keep your trades small. Things can get a little bit hairy, and they especially get hairy as we head into an important topping period where we are anticipating a clipper to take place, and it's important, as I believe I showed you last night, because these clippers tend to take a lot of points off the S&P. So it's something you want to pay attention to, and until that happens, until we run into that time period, you want to just keep things small, lower your expectations, and really wait for the big setup, because that, like I've mentioned last night, you only need to get in a few of those trades per year to do very, very well. So the timing model, we were looking for some type of top to come in mid-July. That was ignored. We got a little dip, and then things continued higher. We had sentiment that was reading extreme bullish sentiment readings, and we had a technical pattern as well as a wave structure, as well as the internals diverging from the indexes, and everything was pointing lower, and the market just continued up. And what I had mentioned to the members is that typically when the metrics of the model get ignored, we end in some type of gap higher that gets reversed, and then it sheds a lot of points in a very fast manner. So we got we had the high sentiment readings, as you can see here, and you could also see we had a sentiment divergence. So this is another divergence that we were looking at, and this was the gap up, and from here we saw that we had the pullback. So we know the sentiment was at high levels. There was a lot of bullish readings, and this was the reason why we were saying it's not, even though the market's heading higher, it was not safe to be just looking long. Now, the big drop that we had over the past couple of days gave us an 11% bullish reading, so everybody went from being extremely bullish to, fairly bearish, and that marked the low for today. Now, it doesn't mean that it has to be the low, and I'll go over why I'm keeping a very, very open mind on things. So the longer-term sentiment, you can see it's heading down right here. This is a support area. If it breaks it, then most likely you're going to see bearish sentiment come in at some fairly low levels. But let's take a look at the charts, and I'll let you know what I'm looking at here. So on the 15-minute chart, this was the pattern that I was talking about, where we had our 1, 2, 3, 4, 5. So typically when we get these moves, it's going to retrace anywhere from 50 to 78% of the move. This is the target area. Now, we made it down just almost to, this is what I've been calling the bull bear line, and the first bull bear line was at the right up here at the 2830 level, and I mentioned that once we took this out, we're going to see a very quick move and most likely be testing the second bull bear line, which is at the 2791. We didn't exactly got to 2797, and for all purposes, I thought we were going to come down and at least touch it and then head up, but we got that news and we got a gap up. And right now we're looking at, it looks like it could be just a bull flag right here, but if we do get that pop higher, then most likely the bull bear line that was on the downside is now going to be on the upside. So if they come up and the bears hold off this 2830 area, then we're probably going to get bearish divergences here. Now, the reason why I was telling members not to get aggressive on the short side down here, especially if we did come down and make another low, was we had bullish divergences on the 15-minute chart here. We were very overbought, and we were hitting an important support line. So this is not the area that you want to get aggressively short. You wanted to get short up here and ride it down. So right now, if we take this line out at this bull bear line, Then we're probably going to get a quick move, and it's going to come down to the 27.70, possibly even down to the 27.62. And really, my ultimate target, if this line gets taken out, is going to be down at this 27.40. That's the bearish case. If this was the low and they head up, the important levels, again, this 27.30, 28.30 is going to be important, and then obviously we're going to have the 28.48, which is the previous highs, and then from there we start looking at this gap here that was at 28.52, and then we have obviously the previous highs. So things are going to get very choppy. Whatever happens here happens. It's not I'm not really that concerned about it. I'm more getting ready for this move that's going to be coming up, and that's really it. So with the trades that I get in right now, if they're going to be quick, they're going to be just take some quick profits and move and trade small. I'm not going to be making any huge bets because we could break down, and it would make perfect sense, especially when looking at the wave structure as well as where the target line is. But we also know that when we're coming into a topping formation like Woody is looking for, the markets can extend like this, but this is what happens at the end, and if you're not prepared for it, you can lose a lot of money real fast, or if you are positioned for it, you can make a real lot of money really fast. And I know that one of them, it was I think a couple of years ago when Woody was looking for the Clipper. I think he turned something like $5,000 into $45,000. We have it as one of our testimonials, but that he was trading options on it, and that's really what you look for, are these types of moves, get positioned for them, and you make it. And like I said, you make 3 or 4 of those a year, maybe not even the 200 or 300 points, but you could make them going both ways, and that's really what we're looking for. And right now we're just in a chop fest. We're going up and down, so you lower your trades, you don't trade as much, you lower your expectations. When we get down to support, you be ready to switch to the long side. If we come up and we hit resistance and come down, you take some profits if you're long. Now's not the time to make any big bets. You want to wait for things to line up for this move, and that's really what we're going to be looking for. And like I said, if we head down tomorrow or come down to these levels, it makes perfect sense because of the wave structure we're in. If we head up, then it means that we're still in that little bit of a crazy market, but it's just going to be setting up for that larger move to the downside. So with that, this most likely will be the last free video report until next week. So enjoy yourself and have a great